traders, Cousin Vinny coming to you from theclosingprint.com, April the 19th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher with the exception of IWM due to small cap oil and gas names which are playing catch up. The Nikkei, the Hang Seng, the Bombay Stock Exchange, and the London Stock Exchange were all higher as well. Emerging markets were higher. The FANG stocks and all of the big cap tech names that we were looking at last week did finish higher, with Tesla up over 31%. Bond stock ratio is bullish at extremes. Dow Composite is in a bullish wave up, and the S&P 1500 is about to give us a bullish cross and a buy signal. XII is bullish. It's above the 200 period moving average and rising into the close on Friday. Sentiment, we see tick and tick Q for the NYSE and the Nasdaq finishing green on the week, with NYMO and NAMO in a bullish cycle. That's telling you that breadth continues to improve. And once again, we saw relative strength in the Nasdaq versus the S&P 500, again outperforming as tech stocks led last week. We have breadth thrusts improving after dipping from the 30% zone. That's actually a tailwind for stocks coming into this week. We have the New York Stock Exchange high-low starting to improve but leveling off at 0, and the S&P 500 equal weight index showed us follow through as A50R continues to improve. Again, another measure of breadth going into this week. Put call ratio is at 0.92. We want to see that drop a bit more. We want more calls trading so that we can get gamma to flip from negative to positive. And we're looking for VIX to continue to move lower. As VIX continues to drop, we have market makers and dealers as well as institutions covering their short put positions, which add another tailwind for the markets and a potential for a follow-through into this week. US dollar is in a range, it's tightening, as are all the other pairs, US dollar yen, British pound US dollar, hanging out at the 21-day moving average. Bonds all saw tightening in their ranges as well. Gold is fading. That's showing a pullback to breakout. We had a triple top, price action scooted higher, broke out, and now has come all the way back down to that triple top breakout zone. So look for that to either fail or bounce on Monday and Tuesday. Copper is rising and bullish. That's a very positive sign for the markets. We did have crude oil currently in a range-bound condition. S&P 500 sectors are improving. They're still bullish. And the international markets have improved as well, remaining bullish for the fourth week straight. We'll look at some IBD 50 names that are set up, as well as some MarketSmith relative strength stocks, Blue Dot Scan, candidates in cyan, and the top volume percent gainers last week in green. Finally, we have Bulkowski with 505 green with a CPI signal green since March the 23rd at 92.3%. That's bullish for the week ahead, with 5 bearish patterns, 60 bullish patterns, and 545 patterns waiting to break out this week. Again, bottom line, we're cautious. We're watching what institutions are doing. All the international indices are looking good. The sectors are good. And we need to keep an eye on gamma, which is improving, with the SPY 0 gamma point at 284 and the S&P 500 0 gamma at 2928. Take note that SPY did close above 0 gamma level at 284. We closed at 286.54. RSI is above 50 and pointing higher, and MACD is above its signal line and rising, signifying the bulls are in control, and with the 200-day as potential resistance overhead, right where that 618 Fibonacci level is from the recent pivot highs down to the pivot lows. In addition, we have the S&P 500 with a slightly higher zero gamma level at 2928 and 618 Fibonacci's at 2934.50. We're through the 50-day moving average. We do have the 200-day just overhead, just north of 3,000. By contrast, the Nasdaq 100 finished very near the highs of the week. RSI is above 50 and rising on this weekly time frame, with the markets up over 31.6% in the process. MACD has turned and moving higher, and volume finished on a higher note. Nasdaq continues to outperform the S&P 500, which has been lagging somewhat due to financials and energy names. Those both were higher and stronger last week, so that could give us enough to push the S&P 500 a bit higher. Breadth is improving. We saw the S&P advanced decline percent move back down to the zero line and bounced on Friday. That's a good sign. In addition to mid caps, small caps, and once again the Nasdaq 100, which bounced last week as well, finishing off just below 30%. So we look a little bit overbought on the Nasdaq at this point. We also see the NAMO, the Nasdaq McClellan oscillator, in a full bullish cycle. Could start to see a peak at these levels, so we want to keep an eye on that on Monday and Tuesday for sure. Finished on a blue elder stick in the upper half of the daily range, while NASI, the summation index, is full on bullish, showing no signs of peaking just yet. All the while, NYMO for the New York Stock Exchange, 2,000 stocks, its McClellan oscillator remains in a bullish cycle as well. Not performing as well as the Nasdaq, but it did finish in the upper half of its daily range. We'd like to see this break out and for the sticks to turn green again, not blue or red, which would be showing signs that we could see a potential pullback. Everything for now points to a potential follow through. So keep an eye on these indicators as NYSE, the summation index for the NYSE, continues to move higher. Again, no hint of a peak at present. The S&P equal weight index, where no stock is more important than any other, price action pulling back to the moving averages. We have a more solid indicator with the A50R moving up to 39%, with the previous week at 24%, the week before that 12%, and the week before that 0.54% of stocks above their 50-day moving average. All this is happening while small cap stocks drag their feet again. We're right at the 2018 low in December. We're consolidating the recent gains off of the March 23rd reversal right at this point. So the markets are up 30%. The original pullback was 44%. We're already back 30.7%. We're looking for RSI to continue to improve on this weekly time frame and for MACD to change directions, continue higher as a function of price. We'd like to see more positive volume, and we'd like to hear on the news that small cap energy names, small cap biotechs, and small cap stocks in general are improving. That would help out this index and hopefully push it above this 125 zone going into May and June. The good thing being RSI oversold, we could see a follow through similar to what we had previously back in December of 2018. While breadth is important, we also want to see VIX moving lower. We want this signal to stay green. This is the 60-minute VIX 1 indicator. This flips VIX. When it's green, we expect to see higher highs and higher lows, which we can see with the indicator has been staying mostly green. So we'd like to see VIX dropping off. This indicator is staying green on the 60-minute time frame to start Monday and Tuesday trading, and for VIX to continue to fade below the 50-day moving average and head back to a more normalized level. If that were to happen, we already know that gamma would improve. We're already above positive gamma for the S&P spiders and need to get above 2928 for the S&P 500. So if VIX drops, that'll help force market makers, dealers, and institutions to cover any remaining short put positions that they have. This is the high-low percent cumulative index. What we're looking for here is for the green to follow through and trigger a buy signal. We're already green, so this is starting to give us a follow-through indicator, which would point to the potential for higher levels near the 700, 720 level. In the short term, that upper Bollinger Band would be the first area. And we'd be looking for histogram to confirm, stay above zero, and push above this dark blue line, indicating a confirmed buy signal for the week ahead. Got to see the crossover first. It's pretty close to that. Looks like we're going to follow through this week if breadth improves. We also want to see the XII ARC Institutional Index moving through the 200-day. We closed above it on Friday. These are the 75 stocks most commonly held in institutions' core portfolios, and a key indicator for us. The fact that it closed in the upper half of its daily range and above the 200 period is a very good sign. The 50-period moving average is the dotted blue line. This is telling us that institutions have been buying back their shares over the last few weeks and could lead to potential follow-through if everything else continues to improve, like gamma and breadth for the week ahead. In addition to that, if we're lucky, we'll start to hear more and more positive news about the coronavirus cases continuing to move lower. That would help the markets restore some sense of normalcy going into the summer months. And finally, we have the granddaddy of them all, the Wilshire 5000 Composite Index, 5,000 stocks. We are starting to see a turn down in the green zone, volume increasing markedly, and 618 Fibonacci just overhead, where we had this multiple top breakout back in October, November of last year, finally hitting a peak and reversing. Copac is now starting to give us a signal that we could see some follow-through, with RSI continuing to rise, about to move through 50 this week. The bond-stock ratio is still in a bullish cycle. It hit extremes, continues to move lower since the February 23rd reversal. It does show signs of changing the angle of descent, so depending on what happens this week with bonds, this currently is favoring equities over bonds as this drops. The moving average needs to turn back down. It'll take several weeks for that to happen. If it does, that's bullish like we saw back in late 2016 after the presidential election. The markets went on a tear. So let's look for bonds to continue to give us signals. With shorter duration like the SHY 1 and 3 year Treasury bond ETF, this is flattening out. If this were to start to drop, that would mean that yields are moving higher on this duration. In addition to the 7-10 year bond, IEF, we can also see that the range is starting to narrow. Instead of seeing this big whipsaw price action, bonds are starting to become more normalized in their pricing as the range continues to contract. While TLT, the 20-year bond, shows us the same indication, which would see the inverse of the 20-year TBT moving higher. So this is a potential long trade for TBT, as this will move higher when TLT starts to pull in. So if you're thinking about trading bonds, look at the two of these. You can either take puts on TLT or trade TBT to the long side with shares. We also see currency pairs beginning to normalize their price distribution. Instead of these big whipsaw price action, we've now started to consolidate right around the 21-day moving average with the British pound US dollar pair, as well as the US dollar Japanese yen pair. Less of this kind of whipsaw and more of the normalized type of distribution that we're more accustomed to as the US dollar calms down as well. So as long as this price action continues to consolidate and we start to drift a bit lower, that'll have an impact on commodities. which reflected a positive trend in copper, which is a forward-looking economic indicator. If this does continue higher, that would bode well for home builders, construction-related names, and building products group stocks going forward. So if you're bullish any of those sectors as well as the economy, you want to see copper continue to move higher. We also talked about gold, how we had this multiple top breakout, looked pretty strong, pulled back to this breakout zone, a so-called pullback to breakout. RSI's fading, so there's the potential that we could lose this level. If you're trading gold, keep an eye on this. We have this volume by price support level just below this at around 1680 and the moving averages. So keep an eye on that. If you're long gold, you might want to take some profits off the table this week. If it starts to break down further, MACD is turning and volume is starting to pick up as traders continue to sell, gold being a safety trade and hedge in uncertain times. West Texas crude is also creating a range. We did drop down below the 18 zone, tested that, and reversed on Friday. So if you're bullish equities, you want to see crude oil moving higher after staying in this range between 18 and 28 over the last 4 weeks. The sector heat map also stayed green to end the week, with a few lime greens starting to populate, and better news regarding the coronavirus cases throughout the world as well as in the US. We also see the international markets looking pretty good. Reading this from left to right each week, this is updated on Friday. We can see that most of the international indices are also staying green and have been improving. In addition to SLK producing higher lows and higher highs, spending Tuesday, Wednesday, and Thursday above the 50-day, while a lot of the IBD 50 hail from the technology sector. In addition to what we were looking for with consumer discretionary, which is beginning to improve as well, healthcare trading the entire week above the 50-day moving average and the 20-day, consumer staples continuing to push, and the sectors that are lagging starting to improve as well. Still producing higher lows, looking for a higher high on transports, which would be very conducive to higher prices, part of Dow theory. Industrials also look good. Financials improving last week with the banks, looking like they could follow through this week. So keep an eye on the banks, in addition to energy, which improved markedly on Friday. Here are the IBD 50. Again, what we're looking for are stocks that are above their 20 and 50-day moving averages, preferably with the 20 above the 50-day. As we can see with AMD, the only thing about AMD is that it's a bit extended and nearing this breakout level at 59.27. This has been on the watch list for the last couple of weeks. We had a nice move above the 9 and 21 day 2 weeks ago, followed through into last week. We had a nice gain. Looking for this to start to flag, perhaps create a handle in this cup pattern, a continuation pattern. If we do see a breakout above 59.27, the depth of the cup is the approximate measured move, so about 20 points above this level, or 79 over the next few months. That's not a guarantee, it's just what might happen if we do have a cup and handle continuation pattern breakout in the weeks ahead. RSI continues to rise and MACD is above its signal line. We do have above average volume on Tuesday, Wednesday, and Thursday, and MACD histogram continues to build taller histogram bars, indicating increasing strength. Autodesk is starting to pick up as well. We also see Alexion on the list. The thing I like about this is that it was very close to the 21-day and 9 EMA. It was very close to the 9 EMA last week. It moved higher. It's right underneath the 200-day. If we do see a follow-through on Monday, I would expect to see consolidation above the 200-day moving average and a follow-through. RSI is above 50. So when this condition is met, RSI above 50, price action recently testing the bullish 9 EMA, which is above the 21-day, and MACD is above its signal line, and you have volume, that points to the potential for a follow-through. And if I was thinking about trading this intraday, what I'd be looking for is for the stock to start out the day above VWAP, like it did here on Friday, and continue to move along the rising VWAP throughout the day. Applied Materials also looks good, right at the 50-day moving average. Again, the thing that I like here is it's not too far extended away from a recent resistance zone, now creating support like the 200-day moving average. If you listen to Mikey this weekend, I think he had a live session on Saturday. He most often will look at the 200-day moving average for potential entry while scaling in, looking for a follow through. So look for Applied Materials to follow through. ARE also moving above the 50-day moving average. It's above the 9 and 21-day, consolidated right at the 200-period moving average. We tested it on Wednesday and Thursday, followed through. Note the wicks at the bottom of these candles. That's telling you those are buyers at the low of the day. This would be your stop if you decided to go long ARE on Monday. This would be your stop initially, then look for price action to follow through, in which case your stop would move from this low up under the opening range low, and look for an ABCD pattern and VWAP to follow through. Autodesk is another good one. This is construction related. It produces construction computer-aided design software that engineers and architects use, in addition to builders and contractors. We're a little bit extended away from the 200-day, but this looks like it's got enough momentum with RSI rising and volume increasing with MACD above its signal line that it's going to follow through. So maybe an intraday flag. If VWAP is strong during the day and it starts off above VWAP at around 10 o'clock or so, we'll look at it, look for a follow through, and for price action to stay above VWAP for most of the day. Any retest should hold and finish higher, preferably at the high of the day or at least in the upper half of its daily range. Pharmaceuticals have also been fairly strong. Looking at Bristol-Myers Squibb, which has been on the watch list for the last couple of weeks. Looking for a follow through. It's trending along the 9 EMA. There is always a possibility we could retest, but note it hasn't retested the 9 EMA since it consolidated underneath the 200-day. Since then, it's been following through for the last 9 trading days. Looking for a follow through this level at 61.34 and then potentially to 67.24 in the weeks ahead. Do note that we saw strength in Eli Lilly, Johnson & Johnson, Pfizer, AstraZeneca, and other pharmaceutical names last week. DXCM is a bit extended from the 9 and 21 days, so what I'm looking for is a potential for this to retest this breakout zone, a pullback to breakout. You can also check out some of the names in the group. Perhaps DXCM's competitors are also moving higher, but maybe gives you a better setup. I like it better when the 9 and 21 day are above each other and have recently tested the 9 and 21 day, the first follow through day, giving you your best entry potential. When you get to these levels, there's always a potential at the ATR3 bands, the upper bands, that we do pull back in a little bit and potentially test this previous breakout zone before moving higher. Facebook, looking for follow through. We're looking for EPAM to follow through as well. FTNT, all of these look very strong. Look like they're going to continue trending along the 9 EMA and breakout. We have RSI above 50 and rising. Volume starting to increase. We'd like to see taller histogram bars and MACD stay above its signal line. This looks pretty good going into next week. Note the wicks in the bottom of these candles telling you that buyers step up at the low of the day. So it seems to have a personality you might want to keep an eye on during the week. If we start to see price action start off the day and then move above VWAP, that's a good indication that there is strength. You also want to keep an eye on relative volume. Those are confirmation signals that tell you that institutions are trading, and something you want to keep an eye on if you're trading stocks like FT&T this week. We also want to have chip stocks continue higher this week, like KLA-10 Core. Some of the other names in the group, AMD, Intel, NVIDIA, want to see all of these moving together with the SMH, the semiconductor index, which stalled at the 50-day on Wednesday, followed through on Thursday, giving us another confirmation that we have a potential for follow-through. Note, Jake and money flow is also above zero, and on-balance volume continues to rise, higher highs and higher lows with MACD above its signal line, indicating we might see follow-through this week in the semiconductor group. Hosting provider GoDaddy also followed through, pushed through the 200-day moving average, staying above the 9 and 21-day, close enough to the 200-day that will most likely see a follow-through and a test of the highs. RSI confirms. It suggests that there's more upside as it's not at the 70 level or above just yet. And we do have volume starting to increase on Friday. MACD's remaining above its signal line. Look for a follow-through in GoDaddy this week. Looking for Microsoft to follow through as well. It's a bit extended from the 9 EMA, so there is a potential for it to pull back, maybe test the 175 zone. If you see that intraday early in the morning, Microsoft does have the tendency to do that. What we like to see with Microsoft is an open above VWAP, stay above it all day, like we had early last week, Tuesday, Wednesday, Thursday, and of course Friday we had a flat VWAP, slightly sloping lower. So this gave us a good indication. This is the kind of thing you want to see on Microsoft to start the week. After about 10 o'clock, and you'd also like to see large option volume trades. Listen for alerts during the live stream broadcast, and if you have a question, just shoot me a DM or try to get my attention and ask me, is Microsoft trading big blocks today? I'll let you know as soon as I do, and maybe we can trade some options this week on some of these big cap tech names. Netflix and NVIDIA also had a good week. We're looking for some more follow through on these names as well. PCRX we talked about before. This one's looking pretty strong. It's right up against the 50-period moving average. If it does something like what we saw last week to start the week, maybe we get a nice entry. The 9 EMA is crossing up through the 21-day and the 200-day is just overhead. RSI is rising through 50. So this is indicating we might see a push up to the 40 level, a $2 move in the short term. That might be nice, with volume increasing and MACD above its signal line, building taller histogram bars. So everything looks like a follow through to me on this particular name that we've cited before in previous weekly videos. Pacira Pharmaceuticals, in addition to what we already talked about with Eli Lilly, Johnson & Johnson, Bristol-Myers Squibb, Merck, and Pfizer. Stocks like Regeneron had very good bullish trends over the last few weeks. It's a bit extended now, so I'm looking for a little bit of a pullback in some of these big cap biotech names. While stocks like ServiceNow are right at the 50-day moving average, looks like they could follow through, close enough to the 9 and 20-day, and consolidating for the entire week that we could see a breakout and a test of some of these levels overhead. RSI is rising, suggesting there's more upside, and these wicks underneath the candles indicating that there's buyers at the low of the day during the week. Just need to see more volume. Keep an eye on R-ball this week as MACD continues to push higher in the short term. SCDG was on some people's watch list last week as well. Viva Systems, that one took off to the upside after moving through the 20 and 50-day. This is way too extended for me to chase it at this point, but it looks like something that might work in the near future if it does pull back a little bit. Zoom Video, this one popped through the 21-day moving average. I use the 20-day and the 21-day interchangeably. Just know I'm talking about the 21-day. Consolidated for 4 days after a nice big move on Wednesday. Drifted a bit lower. Notice the wicks on the candles showing that there's buyers at the low of the day. Could test the 9 EMA. If it does that, look for a follow-through day. There's also the potential that if the news continues to be more bullish and more states start to open up their economies again, that stocks like this that are at 52-week highs might see some selling this week, so be careful with stocks like Zoom Video. While stocks like Workday, who do help human resources departments and companies, pretty looking chart. The 9 EMA was tested on Thursday. We popped up on Friday. Look for a move above 151.30. RSI's got plenty of room to run, so this suggests that we could see a move through 151.30 and then a test of the 200-day overhead at 167.22. I'd be looking for big options trades on Monday and Tuesday. I got a feeling this one might get lit as volume is starting to increase. MACD's above the signal line. We just want to see taller histogram bars. And watch out for R-Vol to continue, which you can follow on stockbeep.com. What you're looking for are R-Vol levels above 2. You can see some of these names like AKRX, which I wouldn't trade. It's a penny stock. But I go down the list very quickly in the morning and I see stocks like Exact Sciences, $74 stock, trading 3.3 times normal volume. Anything above 2 to 1 is usually pretty good. CarMax is a good name. Clovis Oncology was working. Ross Stores. You just have to make sure that you're not buying something that has earnings in the next day or so. Shopify looking good. I know Mikey talked about that one this weekend. Lululemon finishing the day at 2.3 times R-Vol. These are the kind of things you should look for. Insight last week, R-Vol all week was looking very strong. A stock that was on last week's watch list, as you can see, hitting all of its targets while blasting right through that 92 target level. You can see what happens with stocks that show above average volume. That's why it's important to watch R-Vol as an indicator. This gives you a good heads up that institutions are trading. If a stock is not trading 2 or above, I'm not really interested. In addition to 2.0 R-Vol, you also want to see options trading, decent volume. That gives you a good sense of what institutions are planning on doing. You can see what the volume looks like, MACD above the signal line and rising. Now this one's a little bit ahead of itself with RSI overbought like it was back here. Now we're starting to look for a potential handle going into the weeks, going into the summer months, as this cup pattern is generally a continuation pattern. Institutions that picked up shares over the last several weeks are most likely looking for follow-through on Insight Corp going into year end. We also have a lot of stocks in the opening monologue. These stocks in blue, Lattice Semiconductor, Blue Dot Scan. This is telling you that this stock is about to break out. Relative strength line is climbing. We have earnings at the end of the month of April. Looking for a follow-through, a test at 21.78 and a follow-through potentially to 24. That would be about a 10% move from the Friday close. So this has a potential for a earnings run, especially if the semiconductor group that we've previously mentioned continues higher next week. So make sure you keep an eye on these stocks in the list. From the relative strength scan as well as the Blue Dot Scan listed in the opening monologue for potential trades this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter on April the 19th, 2020. Look for the watch list to come out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Do keep in mind that we're looking for more calls to be bought. That's going to help gamma become more positive, especially for the S&P 500, which has a zero gamma level at 29.28. So if we start to see price action moving higher and VIX moving lower, that's a good indication that we might see a follow-through. We'll also keep an eye on tick Cumulative and VIX during the live session to start the week, so make sure you keep an eye. So make sure you tuned in early on Monday and Tuesday. If you can't listen, just watch the alerts channel for potential trades going into the week. Take care. I hope this helps, and we'll talk to you soon.